Hello everyone, how are we doing today? I want to go over an important topic today on scaling into the market. I got asked about this question quite often, and I want to go over uh, in it more in depth because this is to me something a little bit more advanced in my honest opinion and should be really used cautiously. Okay, and let's take a look. I'll give two examples here. Aussie Kiwi as a first example. So let's take a look here. Why do I say it's more advanced and more used but cautious? Because this is when, if a trader doesn't have a good trading plan or risk management, that will affect the overall the account when you trying to scaling into these positions. Let's take a look. There's three things that I want to talk about here. First one is you have to fully understand that the important of the risk that's going to be involved when you trying to scaling into the market. Okay, because with our brokers, with huge leverages that the brokers offer these days now, you can potentially scaling into, let's say, this bullish move that I'm looking at, you can potentially scaling into multiple positions as the trade go up, and you need relatively small amount of money to do so to enter these trades. But this is also how the traders get the new traders is they offer these really big leverage in order for traders to get greedy and trying to enter multiple positions. Of course, it will work out if the trade going in your favor, but your losses are also quantified when um, when the trade goes against you and you lose multiple trades. And this is how a lot of traders blow their accounts, quote unquote, blow their account is because they don't have a good risk management plan. They don't have a trading plan in place. They're taking way too many positions of the same currency pair. They don't consider the risk that's involved. Six, seven trades of the pair, yeah, it's going well, it's going good, good. But what if it doesn't go well? Then your trades are right away. You're right away losing, 10, 15% of your account because of one position. All right. So um, really think about that. Really have a good risk management plan involved when you're trying to scaling into the market. What I would do, okay, is this is the second point I'm leading to now is managing your position well. So if you get into the first position, in this case for me, Aussie Kiwi, I got in. This is my first position entry, and then as price continue to go up, and then as it start forming this kind of continuation correction, I'm looking forward to a possible scaling entry. But I also understand that I want to keep my risk at a minimum, meaning that even if this second trade I'm about to enter is going to be at a loss, my overall on the position itself, I shouldn't lose any money. Meaning that if this trade is already going up, I'm going to secure at least one-to-one profit or at a minimum break even, right? But usually I'm going to do one-to-one profit. So if this second trade, if it goes down, I lose 1% here, but I gain 1% here. So it cancels us out and I'm break even at the overall two of the trades. And this is important is because this is how you mitigate the actual risk that may involve, right? If you don't do that, when the trade takes out you 1% and then continue drop down, hit your break even, so you're minus one overall. Or if you didn't move your stop loss to break even or profit, then it hits your first trade stop loss and you're at 2% loss. Okay, so this is really important as a risk management to manage your first trade so that it helps you to take on the second trade, and then so on and so on. If there's a third trade possible, then manage your second trade, your previous trade, so that you can have the confidence to take the third trade, knowing that your first trade and second trade are already in profits, are already helping you cancel out the risk here. Even if this trade goes on to be a loss, then you're still overall profit on this overall position. Okay, so that's the second thing that to watch out for is managing the positions wisely. And third thing I want to point out is before you scale into the trade, is there enough risk reward to justify a trade? Okay, there's so many people talking about lower time frame positions. There's so many buy, but can you justify it? Is there enough room? Is there enough room for the price to continue move forward? Uh, you don't want to just randomly enter a position because you see some 5 minute entry and you want to get in the buy because it shows up on your chart somewhere, but you're not even consider where the overall price action is at. Do we have enough room? Do we have enough momentum to push the price higher? Is there anything in the way that may hit a double top or something of a reversal area? right? You got to think about that before you enter that second scaling or third scaling positions. Okay. Some price action must be present, right? That has to be present itself for you to have that confluence to enter that scaling trade. Okay, I'm not looking for a 5 minute trade. When I'm looking for a scaling trade, I'm looking for a similar, bigger structure than my original continuation. We know that this is a falling wedge or descending channel, a reversal structure. We had the first bullish impulse out. This is the first continuation correction. It's sizable, it's big enough because we have a few swing highs and a few swing lows, and then we have this reversal head and shoulder on the on the lower time frame, and then we had this kind of flag on the lower time frame to push up. That's my confluence for the first trade. And second trade, second position, if you look here, it's sizable correction. Again, we have a few swing highs, we have a few swing lows, and then 1 hour here we have reversal bullish reversal kind of bullish candlestick formation, which is also a added confluence in my opinion. I'm happy to take this continuation, looking for upside here. So I understand that I was waiting for something that's more tangible, more deeper, more sizable enough that that will give me the confluence that this is going to be a continuation correction for this part of the move, and we're likely to see the next part of the move continue upwards. Okay, so that is the third point, is really understanding if there's enough room. Well, my first initial target just above, just around the top of this correction, I still get about 4.5 to 1 with proper risk management and stop loss. So perfectly fine taking a trade like this. Okay, so those are the three things that you really want to take into consideration. Okay, and let's take one more example here. Let's take a look at here, example of Kiwi Cat here for a possible scaling entry. If you guys know me, that I had an entry here, and let's just say that if this entry was still valid, okay, if there is my first entry is still there, let's just as an example, and then how would I scale into the second opportunity? Well, I understand that from a higher time frame, we have this ascending channel. We break down massively in the bearish impulse. So knowing that we're forming a larger continuation structure, so this is a possible scale in entry if my first position is still present. So I'm waiting for the second part of the opportunity, waiting for a larger structure to appear. And we have again a few swing highs and a few swing lows. So that's good. We had this kind of mini ascending channel on the lower time frame. So we had this mini double top, mini ascending channel. We pushed the price down. One can argue this could be an entry already. This could be certainly a possible entry in my opinion. And then I personally is looking for an entry here. We had this bearish push down on the lower time frame, potentially forming another continuation correction on the lower time frame. But having the bearish momentum from the higher time frame, knowing that this is very likely to be a continuation structure to push the price down. So I'm happy with the risk, happy with this entry. And then if my first position was already still valid, I would have already moved my stop loss to just 2 to 1 minimum, if not three, if not 2.5 to 1, somewhere around this area. Okay, so that even if this trade I entered went on to be a loss, then my first position has already covered that loss, and I'm still at plus 1 or 1.5% of the overall two trades. Okay, but see that but if the trade does work out, we start pushing it down more and more and more, then you can see the quantify of the scaling trade together. Okay, and of course, one can kind of continue argue when the price continue to go down, and do we form another continuation correction? Is it possible to scale in on the third trade? Yeah, absolutely. As long as your first trade in certain profit, your second trade that you enter in certain profit, and your third trade that you're about to enter, even if it's at a loss, your three trades added up together, you're still in profit. Then yeah, I do think that's doable as long as you're waiting for a continuation correction. And again, those 3 points I mentioned, you accept the risk, you know the risk management in place, and you understand that there's room for the price to move. There is enough room for higher time frame for this move to continue, and that there's you can justify risking another percentage here to enter this overall move to the downside. Okay, everyone. So this is my take of scaling into a trade. Like I said, there's many different ways of doing this, but this is going to be safer, and this is going to be uh, um, keeping your account not to expose to unnecessary risk, right? Think about it. Don't get sucked into a situation where you're just entering blindly multiple positions, hoping it will go to your way, right? Of course, trading is probability, right? You of course during sometimes when a person enter those trades, they're gonna work out for them, but is it sustainable on a long term scale and on a bigger account size? Okay, so that is my take on this. So any questions or comments, let me know, guys, and I will chat with you guys next time. All right, thank you very much.